It's a pleasure to have you on Business Incorporated in Channels Television. I am BC Adebayo. Coming up on today's show, Zambia approves a bill to regulate social media and enhance cybersecurity. And Ethiopian Airlines unveils plans to build a new airport in the Oromia region. And South African-based mining firm Goldfields to lay off 30% of its workforce over operational obstacles. Well, let's kick off with the stock markets here in Africa, where it's looking like a bloody Tuesday. But Nigeria's all-share index was down 0.09% at midday, while the South African index was trending lower at intraday. Well, it's the same story in Egypt, where the EGX30 was 0.38% negative also at intraday. And the Kenyan index, however, closed up 0.39% on Monday. And gold stock prices rebounded modestly early on Tuesday from several days of falls as investors were encouraged to buy back cautiously, with the Turkish lira and other emerging markets regaining some stability for now. The Dubai stock index gained 0.6% earlier, but later declined to 0.22%. The Saudi Arabia stock index climbed 0.06%, while the Qatari index was 0.86% higher at intraday. The Abu Dhabi index was also up 0.61% at intraday. And European stocks traded in the black Tuesday morning as concerns over Turkey's economic woes eased. Well, let's cross over now to the Frankfurt Stock Exchange, where Orich Bats is waiting to give us more updates from the market. Orich, so the Turkish turmoil continues to weigh on markets around the world despite a bit of pullback in Europe. How important are calls from some people asking the EU or the IMF or both to step into the Washington and Ankara feud?
Yes, I think it shows how tense people are getting, how nerves are getting frayed over this issue, which seemed to have cropped up so suddenly last week, and which might have a large effect on Turkey, of course, itself, but also on trading partners and on banks. One doesn't know the extent yet. One is hearing more and more, though, that a serious banking crisis is not to be expected. Still, if Turkey does get in trouble, it's also, of course, an important strategic partner. The EU and the IMF could see themselves with calls for stepping up and helping. But of course, there are high hurdles for that. The way President Erdogan is approaching his trading partners, like the United States, for example, a NATO partner, it's hard to imagine that President Trump would say, yes, IMF, go and help. The US are the largest contributors to the IMF. Nothing goes without the US saying, yes, we'll give the green light. And with the EU, well, we saw how the EU, the ECB, and the IMF helped Greece since the financial crisis, bailing it out, with a troika there to practically dictate to the Greek government in Athens what to do. Hard to imagine that President Erdogan would agree to such help, but those are the kind of terms that the EU would need in order to step in.
Now, a surprising positive economic data from Germany is in the news box. Now, how upbeat is the market on this?
It was really upbeat. I mean, the market now is coming down again over the reality check with Turkey. President Erdogan saying he's going to boycott U.S. electronics products. That not being very well received in the market. But certainly the German GDP data, when it came as a real breath of fresh air. Here, a 0.5% growth in the second quarter. And the first quarter growth, which initially had disappointed, being revised upwards, just very good news. Consumption especially strong in Germany, with a strong labor market here. You know, lots of companies, lots of medium-sized businesses, also tradesmen looking desperately for workers, qualified ones, but not being able to find them. And the people who have a job also are looking at wage increases, so that's a strong point. One economist warned, though, careful of the trade conflict. It may not be visible yet in the data right now, but it's already having an effect on the economy, and that businesses are starting to hesitate on investing.
Arich, there's also a broader Eurozone GDP data on the street, with France is looking not so good. What does that tell us? And is the trade conflict with the United States evident in these numbers?
It's not yet evidence there, but it's likely that it will affect the EU, as it would also affect Germany, with lots of countries in the EU, of course, also exporting to China or to the United States or to both. You mentioned France. Yes, France was growing slower than Germany, much slower at only 0.2%. That's half the pace of Germany. But Italy was also growing more slowly. But on the other hand, you have Spain, the former problem child here of the Eurozone, growing much faster than Germany, and Netherlands even growing faster than that. So there you also see a very, very positive trend, albeit with also, of course, doubts about the effect of the trade conflict, a hard Brexit, or the Turkish crisis.
All right, thank you very much, Arich. We'll see you again tomorrow.